Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
CNBC TV18 celebrates International Women's Day.
Welcome back. Well, we told you first and now it's confirmed. Tata Steel has been identified as highest evaluated compliant resolution for Bhushan Steel acquisition. But the process is not over yet. The advisors to Committee of Creditors and Resolution Professional of Bhushan Steel are still in discussions with Tata Steel on the resolution plan, and the final decision is still awaited.
And another stock which will also be in focus today is Amtech Auto. Liberty House has been chosen as the preferred H1 bidder for the company's assets, which include 35 automotive component plants across India, Japan, Thailand, Spain. The company employs 6,000 people. Remember, Amtech Auto is one of the 12 large insolvency cases under NCLT and is facing bankruptcy proceedings of over 12 defaults of over 12,700 crores.
Okay, now to our special series PSB 2.0, where India's brightest minds suggest ways in which India's public sector banks can be nursed back to good health. Former RBI Governor Bimal Jalan has called for an autonomous body like Election Commission to oversee governance of the PSU banks. Meanwhile, the principal economic advisor Sanjeev Sanyal said that there are not immediate plans to privatize PSU banks.
And I think the main issue that we have to grapple with is that public sector banks, which are spread all over, decentralization. I mean, I am in favor of decentralization. That is how a public sector bank should be run. That must be delegated and decentralized to the what you might say an autonomous agency. So supposing now today, if you took a look at the public sector banks and you have a banking bureau, so you don't need a department of banking per se. You see what I mean? I mean, I was a banking, as you know, I was a secretary banking department and all that, and we try to decentralize. But I think that you can decentralize and you can monitor, I mean, how they are performing, and you can hold.
More efficient private sector banks or foreign banks or whoever they are, or even NBFCs for that matter, grow faster than these public sector banks. Some of them which are under now sort of being, the RBI is directly managing them, as you may know, currently will essentially be restricted to some form of narrow banking. So their growth will be restricted and so on. So there can be one way of going about it is organically let one side grows just by virtue of being more profitable, efficient, etc. You can have, for example, our corporate bond market needs to grow. Okay, it's grown, but it's still quite very lightweight. And here, the point is we could seriously begin to think about the frameworks required for it. One obvious one, where incidentally the government should begin to pay some attention, is to create a much more liquid, risk-free yield curve.
Let's take a look at the Asian markets. We're getting some buy from Hang Seng, and that one indicates a strong pop of almost 375 points at one point actually. So good going for that index. The Shanghai is down by about 0.3%, but has no real impact on the other Asian peers, which continue to hold on to the gains that they were in the morning. The SGX Nifty continues to hold on to the gains that we saw early part of the day. In fact, it's only added a bit. 33 points at the start is something we're watching out for. But let's move on. In some political news, the TDP has raised the heat against centre. Chandrababu Naidu has announced that 2 TDP ministers will quit from the Union Cabinet today over non-fulfillment of special category status promises for the state. Nitya Balakrishnan joins us now with more details. Nitya, good morning. What are you gathering?
Well, Mangalam, clearly this seems to be a political pressure move by Andhra Pradesh Chief Minister Chandrababu Naidu. The expectations of now the alliance between TDP and BJP ending is somewhat emerging as more clear. Now, what we're given to understand is that close to about 11:30 p.m. last night, Chandrababu Naidu categorically indicated that the step one in order for TDP to show its disagreement with the BJP was withdrawing union ministers from the government. This, remember, comes out after Jaitley actually looked at, extending an olive branch of sorts from the BJP's end, from the centre's end, saying a special category status would not be given to Andhra Pradesh, but any kind of financial and special assistance from the centre is something that the government could still count on. But Andhra Pradesh Chief Minister Chandrababu Naidu indicating that that would not be enough. A special category status was the birthright of the people of Andhra Pradesh, and he went on then at 11 p.m. to go ahead and announce the resignation of two of his MPs from the centre, which will take place today. We're given to understand that Y.S. Chaudhary, Minister of State for Science and Technology, and Civil Aviation Minister Gajapati Raju will be tendering in their resignations this morning. Step one, like I mentioned, in the breakage of the ties between BJP and TDP at the centre, and it will remains to be seen whether they will go ahead and formally cut ties, sever ties, if the centre does not blink any further.
Okay, thank you, Nitya, for bringing us that update. That is something to really keep an eye out on. But in the latest from the PNB fraud scam, after P. Chidambaram, the CBI will now initiate a probe into the role of former RBI Governor Raghuram Rajan in passing the UPA's 80-20 scheme. The centre had earlier questioned Rajan's motive in hurriedly approving the scheme. Remember, it was CNN News 18 which first exposed the Chidambaram as well as the Choksi link in the 80-20 gold scheme. Mehul Choksi's Gitanjali Gems was one of the beneficiaries of former Finance Minister Chidambaram's decision to amend the scheme rules during the final days of the UPA2 in 2014. Well, let's head across to the commodity space, and Manisha Gupta joins us with all the update from the world of commodities. Manisha, good morning. A very happy Women's Day to you, but what's happening in the world of commodities?
Very happy Women's Day to you as well. Well, there's plenty happening in commodities, and it really has to do with what's happening in U.S. really, because the major cues seem to be coming in from there. There is now expectation that the U.S. could sign an import tariff regulation by the end of this week, and that is keeping all of these markets quite jittery. So you have the metals as a sector actually seeing a bit of a decline. In bits and pockets where you have seen gains really has been in case of steel, but almost everything else in the overnight market saw a decline between 1 to 3%, whether it was zinc, nickel or lead for that matter, which fell 2.5% as well. There has been a lot of pressure in case of aluminum prices, because if you look at the inventories on Shanghai, those are at record highs. The inventories on LME warehouses have increased quite a lot in last 1 month as well. So we have seen a lot of pressure start in Asian markets for aluminum today. The crude oil prices, which did see a decline of 2% overnight, have seen some buying come in on the lower levels right now. But if you look at the U.S. inventories, they have seen a build-up. The U.S. imports have been higher. The U.S. production has hit yet another record high. And as per the IEA reports, you are looking at much higher output from U.S. continuing over a spread of next 5 years. So that will continue to keep some pressure on prices. 2018 is expected to be a positive, a consolidating year until the OPEC and the allies continue to cut output. But out of that, I think the non-OPEC supplies are set to increase.
All right, Manisha, thanks a lot for that. Once again, wishing you and all the women a very happy Women's Day. But let's just focus back to the equity markets then, the F&O space. You know, day before yesterday, if you thought the F&O volumes were high at 7 lakh crores, yesterday it went even higher at 8,69,000 crores thereabouts in the F&O space. And early part of the series, high volumes is something we need to keep an eye out on, given the ferocity of the fall that we're seeing. And not just the F&O, the FI selling in cash market resumed. They sold yesterday. But in index futures, there was a purchase of close to around 377 crores on a net basis. Beneath the surface, there was a huge amount of volume there. The FI has added 13,500 longs and 10,800 shorts, so marginally higher longs added. But despite that, the FIs are still net short, 47% long in index futures. In index options, there was a sale worth nearly 950 crore rupees. What took place there? Well, the sale accounted for unwinding of long positions in index calls, so reducing your bullish positions, adding some short positions in index calls, believing that maybe the upside is limited and can face some hurdles, protecting themselves on the downside by buying some long puts, and believing that the downside is open by adding very little short puts as compared to short calls. The 10,200 call saw some writing. So over the last 3 days, we're seeing writing on the 10,400 call, 10,300 call. As the market comes lower, the bears get a little more aggressive. So the 10,100 put is something I'll be definitely watching out for. 10,300 call saw some writing as well. It's a Thursday. Watch out for the Nifty Bank Weekly options expiry, the maximum open interest on the lower side is at 24,000 put. That is something I'll watch out for. And we saw a lot of writing at the 24,300, 24,400 and 24,500 call. Just one stock I'll keep an eye out on, Fortis, because of the whole news flow that's taking place. The stock was in F&O ban for all this while and now it's out of F&O ban. So that is something I'll be watching out for today.
Oh, so interesting to see how Fortis Healthcare reacts today, because that stock has been in focus and a lot volatile over the last month or so. But on to the bullseye corner now. Let's hear our contestants what they have picked for day 4 of the week.